Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's green. In today's video, I'm going to be taking a look at the stock market as well as other charts, macro charts, indicators, and the magnificent 7 stocks. So starting off with fear and greed, as you can see on CNN, we are still deep into fear, and a couple other charts that are just important to look at is that, well, for one, the market overall is expensive. So you want to look for indicators and ways of finding good value in any of the stocks that you like. So historically, it is still an expensive part of the market. You might not see the best returns 5, 10 years from now, just with where the market is today. So don't try to FOMO and be careful with your hard-earned money. But a couple other things to consider in the back of your mind is that this recent pullback, it's somewhat normal. There is this inauguration dump that happens around new presidential elections. So on average, you can see just by looking at the dates, around 100-ish days, 3 to 4 months, we can see sideways or even downwards action. Doesn't it mean it has to be 3 to 4 months? It might be 2, it might be 6, who knows? But that this is pretty normal after an election. And another macro thing to keep in the back of your mind is that usually the second year of a presidency tends to have the lowest returns on average, and that matches up with other data we've been looking at, whether it's Bitcoin and the crypto cycles, whether it's the yield curve, and we'll get more into that. Speaking of crypto, because I know a lot of you are here on my channel for crypto, and we talk all about that, so subscribe if you want to hear more about that. Crypto still on the border of extreme greed, and I talk about mining stocks and the Bitcoin cycle on this channel as well, and other altcoins time to time. So subscribe if you want to hear more about that. As far as the S&P 500, it's still in this downtrend. We're waiting to see if it's going to get some support here on the 20-week moving averages. Now, a couple of things to note here is that, one, you see this uptrend between these dips, the last dip in August and the low in October of 2023. It is hitting that trend line, as well as this parallel channel or parallel trend line within the channel right now. So 3 convergences of supports here, the moving averages, as well as those 2 different trend lines. So maybe we can see some good support here going in on the daily. What do we see is that the market had a little bit of bounce off the 100-day moving average, challenging the 50-day right now, seeing if it can turn that into support. But otherwise, historically speaking, again, going back to 2023, once this little bull run began, only once has it gotten underneath that 100-day moving average. So maybe an area for a decent sized bounce. Now, as far as the price action going on in the markets, a couple of charts that I think are important to look at right now is, one, the US dollar that has been going up overall. Let's zoom out on that. Well, no, we got it. That's been going up overall. You can see it broke some horizontal trend lines here, so we'll see, is it going to get up as high as 114? These are some areas to look for, even right here at around 110, 111, possible area for some resistance. And the other chart that the markets seem to be following is the US10-year, and the 10-year has been going up right now, and as this goes up, usually the markets aren't so strong or going down a little bit. And this has to do with the yield curve inversion. We'll talk about that here in a minute. But the US 10-year going up, it is having a pullback. But on this channel, when we're looking at price action and supports, this is why we throw on the moving averages. So let's see if it's going to keep going up off this 10-day moving average. Otherwise, you can see it came all the way down to the cluster of the 50, 100, and 200. Is it going to come all the way back down again, or get some support here? So I would like to see it break under that 20-day moving average. Let's see on the weekly if there's anything that shows us any better. Yeah, this just shows us a bounce off the 50-week moving average. So I think on the daily, if it starts to break under the 20-day moving average, you'll see positive reactions in the stocks. But if it keeps bouncing off that, you want to look for possible resistance here around the 5% area, and hopefully that's where it ends. Let's go over to the VIX, and right now the volatility is still low overall. We do have this base, this minor uptrend here, higher lows. There's also lower highs, so we'll see what goes on with that in the future. And as far as the percent of stocks that are above their 200-day moving average, we were talking about this last week because this was matching the low back in August. The whole yen carry trade unwind when the stock market fell by 10%, crypto fell by 30. And I was saying this might be front running or showing us this can be a leading indicator of a possible dip area to buy, and it is starting to come up. So good signs for that. If it does go lower, we do have this trend line support around 41, 42. So I do think this is a good indicator to have on the percent of stocks above the 200 moving average. So it's talking about 2026, and I'll show you a couple of things that match up with that. So we're talking about how the second year in a presidential cycle tends to be bearish or the worst. Now, that's just one piece of data, but you want to put other data together that doesn't have anything to do with this, and one of which is crypto. Crypto has been going in these 4-year cycles, been having these 4-year peaks, and as far as where the bottom would be expected based on this 4-year cycle, it would be around 2026, 2027. The other factor we got going on right now is the yield curve inversion. And when we zoom out, this has preceded market bottoms when the yield curve has been inverted and then uninverts. So when the Fed raises rates, the yield inverts, and when they are trying to lower rates, it uninverts. And now we'll see what happens with inflation concerns. It's always possible they just pause, raise rates again, and then we get a downtrend. But when the yield curve starts to rip up, like we see here, the market bottoms, and you can double check the data, the market bottoms around early 2009 and summer of 2002. You can see that this is just the dot-com bubble, 550 days, give or take. I'm probably not perfect on the charting here, and 650 days, the great financial crisis there. If some average of that were to hold true and we just take 600 days, that would put us out, you can see the data at the bottom, in 2026. Now, is this going to play out like that? Maybe. One thing that I'm considering this time around is that the inversion, it was inverted for longer and deeper than before. So maybe the recession or the dip is going to be further away than we think. We'll see. So 2026, we can come back to this data, 27, and see how true was this. But it's been a pretty good indicator in the past. Last week, we talked about unemployment. The unemployment numbers came out. And what did it show us? Is that unemployment ticked down a little bit. So was at 4.2, came down to 4.1. There is the inflation report, and that came down as well. So let's pull up inflation. The PPI and the CPI all been coming out, and right now this just, it's always interesting when it shows which moving average it's at. Right now it's at the 10-week moving average, so we'll see if it can get a bounce down off this 3%. Going over to Bitcoin, and then we'll get into the Mag 7 stocks. Just chopping sideways here. I have on the Heikin-Ashi candles to show the trend, and right now the trend is being watched around. We have two dojis back to back, dojis being undecided, and so yeah, we'll see. It is possible Bitcoin could go lower into the mid to lower 80,000s if this bearishness were to continue. Let's go over to the Magnificent 7 stocks, and on the weekly we can see Nvidia with a sell signal, but it's had these and just chopped sideways. So right now it is finding support off the 20-week moving average. If we go lower, you can see it is like the 100-day moving average in the past. Gets down underneath it sometimes, but it had a nice bounce off that 100 days. So now it has to contend with the 50-day. This may have been decent value here. Now, as far as Nvidia overall, would I be buying it right now? I try to answer the essential question, not get too caught up in predictions and stuff. Something to consider is this, and you never know what the stock market's going to do. But since October of 22, so 2.5 years ago, almost, or 2 years, 3 months. Nvidia's up around 1,200%. That's a lot, even for a crypto. And so just keep that in the back of your mind. And something I also look at is consider, well, within the last year, is it within closer range of the highs or the lows? Well, it's closer in range to the highs. So if you absolutely love Nvidia, you could look at the charts, look at these moving averages, and say, well, on the 100-day moving average, that has been some of the deeper value, and possibly dollar cost average a little bit into there. But again, keep in mind those macro charts that we talked about, how the second year of the presidential cycle, the yield curve inversion, the crypto cycle, that just if you like Nvidia here and there is a decent, let's say 40% market correction coming up with the S&P 500, you could see these magnificent seven stocks falling off 40 to 70%. So if you like it here, are you going to buy 40% lower in the event of a recession or a giant market correction? If the answer is no, then you shouldn't be buying it now. But if the answer is yes, and you don't mind the value and dollar cost averaging in on the way down, then that's fine. So just something to keep in the back of your mind. We never know what the market's going to do, when it's going to correct, but we'll use the charts to try to help us. Microsoft still inside this wedge. It's been having nice bounces. Not the best wedge, but you can see Microsoft is like the 200-day moving average. Though it's challenging a bit much for my liking. We'll see if it gets rejected like it did recently off the 50 and the 100-day. And if so, challenges this wedge again. Is this wedge and how much it's challenging the lower end of it, showing us that it might possibly break down to the 400 level or former all-time highs around 350 maybe, but this battle is taking place right at the 1618 and around 432. If Microsoft were to break up out of this wedge, the 2618 is all the way up there at 566. So something to consider, and its former high here is around 468. Apple, we have Apple coming down to the 100-day moving average, and if you love Apple, since this uptrend in April of last year, it is like the 100-day moving average at its deeper value. Can it go lower? Sure. Last year, was it last year? Yes. In April, it got all the way down to the 100-week moving average, and we talked about how historically we don't see Apple at that deep of value, the 100-week or lower, only once every 2 years. So I said, there's probably some decent to pretty good dollar cost average territory. Could have got Apple at a 170, and right now it's at 234. So not bad. Weekly, we're still waiting for confirmation to the upside. And speaking of which, other indicators you can use to look for that: stochastic RSI, MACD. The stochastic RSI still going down, so that we don't have confirmation and it's a bit away. Don't be surprised if it comes down to its former 1618 at 220 in the 50-week moving average. We're still a bit a ways from bottoming out on the stochastic RSI and the MACD. These are other good charts to look for. Confirmation, the MACD just started turning negative. So Apple, with those charts, are showing us that there could still be room to the downside, and we would be eyeing this area. So have those on. Sometimes I like to look at the Fibonacci retracement scales, as well as the moving averages, and just dollar cost average deep value. However, if you're waiting for more confirmation and to not catch a falling knife, then you add on the stochastic, the MACD, wait for buy signals. You won't always catch as deep of a bottom, but that's a risky play. You won't, but you'll be able to hedge your you'll be able to hedge your risk and make sure that it's not going lower, that the charts show there's more of a bottoming process. So, all right, as far as Amazon, hit this peak coming down a little bit. Let's zoom in on the daily. What do we got here? So the daily, after it hit this peak, came down underneath the 20-day, almost to the 50-day, but it is in this downward channel here. Maybe it's going to come down one more time, see how it reacts off the 50-day. It is like the 50 and the 100-day recently, so maybe it'll finally get a good bounce there. Let's go back to Amazon. We're still waiting for the 1618 at around 255, somewhere around there. Google still battling the 1618. Kind of like Microsoft, we have the higher lows, lower highs, but still at the 1618. Did break out of this giant wedge recently, and if it gets to the 2618, it's got to turn the 1618 into support. But if 2025 gets some sort of euphoric phase, I'd be looking at profits from Google at around 261 there. So if this were to break down, watch for the 50-day moving average 185, as well as this wedge again in the 100-day around 178. As far as Meta, and then we'll go to Tesla. Meta, it loves the 20-week moving average this whole way up. It has liked it, the 1618 there. And Meta, the 2618, this giant target, 860. 860 for Meta if things are to continue being bullish for it. But otherwise, if it breaks underneath the 50, whereas it like support in the past, as deep as the 100-day moving average, and really not too much deeper, sometimes a little bit under. So if it gets under here and you just absolutely love Meta, that'd be an area to look for. And lastly, let's take a look at Tesla. And Tesla, okay, it was in this channel, popped up out of it, came back down to the channel as support, and its former all-time high at around 412, the former all-time high back here in 2021, when Elon graciously ran a poll on Twitter asking if he should sell Tesla stock. He was being very philanthropic at this moment. Look it up if you don't believe me. He ran a poll asking, should I sell Tesla stock here? He's being so generous. So generous Elon sold his Tesla stock at the very top. What a nice guy. But here, obvious sarcasm. But here, just looking at the price action, it is on that former all-time high. Had a nice bounce off the 888 and the channel. So if things were to get pretty bullish for Tesla, we can see here our fibs off log. The 1618 target, crazy as it sounds, $606. So if Tesla starts to shoot up and this thing's looking like it could get mega bullish, that'd be an area to look for. But another thing to keep in mind is that Tesla, after as these big moves up, can have decent sized corrections. So you can see big moves up 10 weeks in a row, starts to fall off, big move up, kind of went sideways, big move up, 10 plus weeks in a row. What's going to happen here? So Tesla pretty extended right now, but if you believe this thing's about to turn on the afterburners, that 600 number would be something I'd look for. So anyways, that's going to do it for today. Thank you so much for watching and have a wonderful day. Take care.